So our next speaker, Amit Kurseja, I think a lot of you saw him this morning. As you probably heard, he's head of external payments at Amazon Pay India. So bringing, I would say, insight on two challenges. First, going from online to face-to-face in a payments world, as well as doing that in a very specific emerging market. So please give a warm welcome to Amit Kurseja.
Thanks, Ellen. Well, it has been a wonderful day for me attending the conference here, and I've certainly learned quite a bit about the European markets. So I manage acceptance of Amazon Pay, as Alan spoke, and whatever I'm going to talk about is about Indian market. So please don't assume that same applies to the other markets where we operate, and certainly not to European markets. So it's very specific to India. The subject that was given to me was very broad, exploring mobile and e-commerce challenges and opportunities in India. It's a very broad topic. I cannot do justice to it in the next 10 to 15 minutes. So I'm going to hone in on some specific opportunities and some specific challenges that are exciting for us right now, and we are trying to solve them. Why should you know a little bit about Indian market, or why should you spend time on this? I think it's a great case study for all of us. For all the practitioners in payments, it's a good case study if you want to build products for future where the world is becoming more mobile, where if you're building products for a younger generation. So these are some of the statistics, what makes the market interesting. 1.25 billion people, so essentially 1 in every 6 individual is getting impacted by this digital transformation that is happening there. 65%, so 800 million plus people are under the age of 35. So a very young generation who are mobile savvy, and about 1 billion mobile phones. 85% of e-commerce is coming from mobile. So it's not an omni-channel strategy that we are talking about in India. It's a mobile-first strategy that all the merchants are talking about in India. And it's a $1 trillion market opportunity. Today, it is at 200 million, but it's going to be 1 trillion in 5 years. So that's the kind of growth that is anticipated in the market. This is what Amazon Pay's strategy is. It's actually quite simple. Find wherever cash is being used and replace cash with Amazon Pay. So no rocket science there. And why is that our strategy? For simple reason that cash is the only competitor. When I say that, I mean that it is a market leader by huge difference. So 90% of all the value being transacted is in cash. So there is no point in an Apple Pay considering a Samsung Pay a competitor. They all are within that 10%. So the opportunity to go after is really the cash that is out there. Cash is expensive too. So according to a Visa study, it costs us 1.7% of the GDP at a macro level. So if we can reduce the dependence on cash, it can actually add to the GDP of the country. But from e-commerce perspective, when we look at it, cash is 4 to 5 times more expensive than digital payments. So when I say that the 70% of orders in India are being placed on cash on delivery. So customer orders goods, and when he gets it, he pays in cash. This increases the rate of refunds, returns, no-shows, rejections. And if you put the economic value to all of that, you will see that the cost of payments is actually 4 to 5x more than what it would have been if the payment was made digitally. So it's a really big problem for marketplace business to solve, and that is what we are doing. And of course, all of us know cash is dirty too. So it leads to corruption, terror financing, and all the evils that you can talk about, besides the fact that it's literally dirty, that it carries like hundreds of species of bacteria and all that. So all the good reasons to kill cash and move people from digital to cash, from cash to digital, sorry. But is it an easy problem to solve? There was a massive experiment that was done in 2016, November, when government of India banned 86% of the value of currency in circulation. And the idea was that your notes, currency notes are no more valid. You go deposit it in the bank and then start using the digital modes of payment to do business, to do any transaction. But as this graph shows, within 1 year, all of the currency, pretty much all of the cash currency came out of the banks. So from that perspective, it was not a very great experiment. And it just shows that how hard it is to change habits of people when it comes to using cash. We look at merchants in these 4 categories. So e-commerce, m-commerce, and then there are 2 segments of face-to-face, the organized merchants and unorganized merchants. When we talk about e-commerce, these are generally merchants who are lesser frequency merchants. So for example, you order shoes online from your favorite retailer. You probably will do it twice or thrice a year. But something like a high frequency use case, for example, food delivery or ride booking, like an Uber or an Ola in India, you typically do it like few times a week also, right? So those kind of merchants which are less frequent generally operate on websites, on the desktop. And the other type of merchants which are high frequency have their apps, and customers are really glued to their apps, right? So that is how we differentiate, and there are different products that help in both the segments. So in web kind of environment, hosted checkout solution is very famous in terms of adoption in our merchants. Whereas in case of mobile, we are working on tokenizing Amazon Pay account to the merchant's app or the device, and then the transaction becomes really seamless. Then on face-to-face merchants, there is a connected merchant who has a POS and can use our APIs to integrate with and do transactions using those APIs. So customer walks in, shows a dynamic barcode or a QR code on their phone, merchant scans it, and the transaction is done. So that's what we call organized merchants. And the last segment is the micro merchants. So these micro merchants are really small merchants who do less number of transactions. The ticket size is small, but the number is really huge. So for example, if you go to the closest train station, I was there yesterday, so there was this Asian lady who runs a store and gives you noodles in the box. So that would be a typical micro merchant for us. Now, what I want to focus on is just this last opportunity, which is the micro merchant opportunity, because it will be difficult to go in all of them. So why is it an important opportunity? First of all, just the size of it. So there are about 59 million micro merchants in India. When I say 59 million, you can imagine that it's bigger than the population of some of the decently sized countries, like South Africa is some 54, 55 million people. So we're talking about 59 million micro merchants here. And these people have very low adoption of digital payment methods. Only 10% of them adopt or accept digital payment methods. And even if they do, their card share is not beyond 5%. So really low penetration there. And the size of opportunity. So again, this number is currently 10 billion and is expected to become 135 billion in next 5 years. So while the overall market is going to grow from 200 to 1,000, so the 5x, this particular segment is going to grow 13x. So that is why this is an opportunity which really excites us personally in India. What is the challenge in driving adoption in this segment? So one is the cost. So EDC machines are expensive. Then there is maintenance charge, there is MDR, so all the costs associated with it, no matter who is bearing that cost in the ecosystem, it just makes it difficult to drive adoption of EDC machines. Then anonymity. So many of these micro merchants do not pay tax or do not want to pay tax. So that is one reason that they stay away from digital payments and are happy transacting in cash. Then the third problem is real-time value transfer. So these people are used to buying inventory on a daily basis, or some of them are kind of daily wage earners. So whatever they earn that day, they have to buy food with that. So a T+1, T+2 kind of a settlement doesn't really work for them. So you need a different kind of solution for that. So because of these problems, all the networks and all the banks combined have been only able to deploy 3 million EDC machines in the country over a 2-decade period, whereas just the number of micro merchants itself is 59 million. So there's this huge gap to bridge when it comes to creating infrastructure for accepting digital payments. But good news is that there are signs of adoption, and there is some very rapid growth that we are seeing right now. So this is the real-time payments platform that we have in India called UPI. It's a really advanced mechanism of payment, and I can talk a little bit more in the discussion later about it. But that's the kind of traction we've seen. So just 1 year back, the number of transactions happening was 150 million. And in 1 year, the number has moved to 672 million. So approximately 21, 22 million transactions a day. And most of these transactions are small ticket size P2P, P2M transactions that are happening on this platform. So what is the reason of this growth? There are few fundamental factors and few short-term incentives that are driving this. So amongst fundamental factors, the QR codes being used instead of a EDC machine is one of the primary reasons, right? So imagine the cost of deploying an EDC machine was almost $300, and a QR code brings down the cost to $3. So that makes a huge difference in the economics that drives the industry. Then there are 1 billion mobile phones, so the whole problem of connectivity is now solved, and every device can connect and make the payment to the merchant. The third point is the advanced instant payment settlement systems that I talked about, the UPI in particular, that is driving the adoption. And on short-term incentives, of course, there is zero MDR and low MDR that is being mandated by government to some extent, and also private players are offering it to drive adoption. And also the customer-side incentives that are being run. But everybody understands that these are short-term incentives. If you go and talk to these merchants and ask them what is really now changing that they have started accepting real-time payments, one of the feedbacks that we are getting across from all the merchants is that the instant settlement or the real-time payment system is making a lot of difference in their lives. That was kind of the last frontier to break in terms of making cash as good as, in terms of making digital payment as good as cash. So that is what it is trying to break, and we are seeing adoption because of this particular reason. We went back and asked the other set of merchants that, do you equally value instant settlements or not? And what we saw was that while everybody says that, who would not like 1 day early or 2 day early settlement, but the incremental value that we saw in rest of the 3 categories was really, really low. So an e-commerce and an m-commerce merchant or a large organized merchant does not really see that much value in real-time settlement as a small merchant would do, right? So that has been the big learning. I just want to leave you with one last question. As you guys are also working on SEPA instant payments initiatives, have you thought of which customer or merchant segment will be impacted the most by the products that you are building right now? We often get carried away by the new regulation that has come or the new technology that has come, but we forget that which customer or merchant segment will be benefited the most, and hence we should prioritize that. So just want to leave you with that thought, and that's what I wanted to share. Thank you.